Okay, so in the last video we imported a trial balance, we calculated the materiality, and now let's assign that materiality to my financial statement areas. So in order to do so, I'm going here to my document FSA, the FSA worksheet. Okay, there we go. And well, right away I'm kind of greeted by the FSA with the message saying that my FSA worksheet is generated, but no planning balances are in the file. Okay, that's good to know, because it's the planning balance is kind of crucial. A lot of things within the audit template, within audit, run off this planning balance. So let me take a little time to explain to you the concept. Here we have the group number, the group description. So in this case, that's the lead sheet codes or the mappings, which is basically the same thing. And here I have the final balance. Now, if you also watch the video on the materiality calculation, this might be a little bit familiar for you. The final balance comes from the work in papers trial balance and is always a real-time amount, a real-time balance. So when I'm posting adjusting journal entries, my planning balance will change right away. Or maybe I've imported a trial balance, and 5 days later my client comes to me and says, oh well, we had some changes. Here is a new version of the trial balance. When I import that into working papers, my final balance will change right away. Now, for planning purposes, you don't always want it, because when you make your decisions, you want to have this audit trail that based on this planning balance, I made these decisions, so that shows from your file. That's why we've introduced this column planning balance. And by hitting this button here, we call it the refresh, my final balance is actually copied over into the column planning balance. It's not only doing that, it's also changing the date here, saying that this is the planning balance for this client as of June 22nd, 2015. So it gives you that audit trail, but now also this planning balance will never change again in your file unless I hit this refresh button again. So, well, first of all, you users should know not to always click it when it's not relevant. But this planning balance now will stay the exact same, and it will always show you throughout the engagement that based on this planning balance, we've made our initial planning decisions. And we made our decisions which financial statement area is material and which one is not. Okay. So in the last video, I've also explained to you that my materiality amounts will always show at the top of each document. So they also show here in the FSA worksheet. And based on those amounts, we can now mark which financial statement areas are material and which ones are not. So, well, this is all larger than materiality, but here things are a little bit more specific. So I can tell you, but I can also let the software help me out. I can do a right click and say display materiality details, which opens up 4 additional columns. Now these columns are calculated, so I cannot change the checks here. But this illustrates to you why, for example, prepayments is material. So you can see here that for my overall materiality, preliminary and final, prepayments is actually smaller, so it would not be material. But for my performance materiality, prepayments is actually larger than my performance materiality. And if you hover over these checks, you see all the conditions that we are checking. So hopefully that gives you a lot of guidance how we decided that prepayments is now material. If we look at cash and cash equivalents, you might notice that this amount is actually quite a bit smaller than our performance materiality of 105,000, but still it's marked. Now, you would only notice if you've seen the video on materiality calculation, but let's assume you do. In the materiality calculation worksheet, we've set up a adjusted performance materiality for cash and cash equivalents. That is 15,000. So now this 22,000 in the balance is larger than 15. Therefore, cash is now also material. So this is to illustrate that the adjusted performance materiality also flows into your FSA worksheet, and any decisions made on your adjusted performance materiality will now lead to the software marking this as material. If you feel like you've made a mistake, or if you don't agree because this is purely based on the balances, you can always overrule. And then you will see that throughout the whole package, the user is always in charge. So let's say I'm not happy with this, I can just untick it and say my prepayments is no longer material. Similar as in the materiality calculation, that means I'm overriding a calculated value, which is illustrated by this red dot, and this red dot means, okay, the user has made a decision here. So as a reviewer, I would always review and check this column, make sure if there is a red dot, do you agree with this? And again, if you want to go back, to the calculated value, you do a right click, remove the overridden, and it's no longer not material. Okay. Okay, and if I scroll a little bit further here, I got my other current receivables, which is not material. No adjusted performance materiality there, so it's just not material. Now, let me see. If I switch back to my work in paper file and go to the document manager, I've created this file based on the template. And in the template, all the work programs, all the areas are included. But if you look at investment property and intangible assets, and I go back to my FSA, you see that there's no balance whatsoever. So this client doesn't even have any investment property. Now, so that's unneeded documents in my engagement file. If you want to get rid of those, it's actually quite easy. I just go to my Audit Optimizer confirmation report. You might remember this from one of the first videos on creating a file. And now by clicking that link, it's opening up my Audit Optimizer confirmation report. It's processing all this information. And it's now saying, okay, these areas, an area is a work program and lead sheet documents, are not applicable for this client. So I'm going to suggest to delete those. I'm also going to suggest to delete all my non-material areas. So my other current liabilities will now also be deleted from my file. If I don't want that, maybe because it has a balance and I can see that here, I could still go in and untick this and then they won't be deleted. So I still have this option to overrule the suggestions from the software. Okay, let's assume I'm okay with that, and I'm just going to click proceed with deletion. You get this warning that there's no undo, but again, you can still drag and drop the documents back into this engagement file through the document library. I'm fine with that. That's now deleted, and if I switch to my work in paper file, let me see, sorry, there, you will now notice that my area for assets has become a lot smaller. So I only keep the audit sections that are really relevant for this client. Okay, if I now go back to my FSA, there's a little nifty feature here. So let's say I'm doing my work, at some point something changes, or I change my mind and I want to say, okay, my other current liabilities now has become material, and I tick it. And let me just hide my materiality details. Okay, let me hide another couple of columns here as well. just to show you this in one screen. Now remember, I'm on a lower resolution than I usually are for recording purposes. So usually this shouldn't be a problem. You'll just see everything on the screen. So now my other current liabilities, it was not material. I've used the optimizer to delete all my irrelevant areas from my file. After that, I decided like, no, made a mistake. This is material. Now I get this little icon here reminding me that this was not material. The documents don't exist in your engagement file. And I now can just click this and it will undo my decision. And it will copy over my area for other current liabilities from the template into my engagement file again. So that little feature was something that was highly requested by users. It's just easy, just usability. You don't have to go and do it manually. Just click the button and it's brought back in to your engagement file. I think, yep, that was all that I wanted to explain on this. So we've calculated the materiality. We've now assigned which areas are material in the FSA. That means we can now continue with the next step, and that's risk identification.